Greetings again, amazing traders. In this episode, we are going to look at the order block theory. Now, what is an order block? An order block is simply a change in the state of delivery. An order block is a change in the state of delivery. What does it mean? It simply means that if IPTA is delivering buy side liquidity or buy side price delivery, and it is about to change the state in delivery, okay, there is a signature that we are going to see in the market indicating that the smart money is about to take the market in the opposite direction, and this is represented in the form of a candle called a block, an order block. We already said that an order block is simply a very huge transaction that is carried out by the smart money in the market, and these transactions are usually done outside the normal flow of the market, like probably when the market is closed, because if it is done when the market is open, it's seriously going to affect the market. They are actually extremely huge financial transactions, and that is why we refer to them as order blocks. Now, in smart money concept, we define an order block as a change in the state of delivery. I am going to show you, depending on the candlesticks that you use. Some use different colors, but in this scenario we are going to use the green and the red candle. Now let us look at the bearish order block, for example, and then the bearish order block. We have the bearish order block and the bullish order block. We are going to start with the bearish order block. Now let's assume that you are in a buy market where the market is forming higher highs and higher lows, okay, or IPTA is in a buy program offering buy side price delivery and seeking buy side liquidity. Now at a certain point we see a green candle form, and there is another red candle that forms but does not trade above the old green candle. Now if price continues to trade below this last green candle that was traded here, we are going to consider it an order block, a bearish order block, because if price ever returns to this bearish order block, we want to see a sell-off from there. Now this bearish order block is an indication that the smart money is about to reverse price or take price to the opposite direction. So for the short format, we often say that the last buy candle that is formed in a bullish market is a bearish order block, okay. The last buy candle that is formed in a bullish market prior to a reversal is a bearish order block. But usually when you see the last buy candle, it is always vague because there are criteria that must be met for a candle to be considered a bullish candle or a bullish order block or a bearish order block, and I'm going to show you those criteria here. For example, for a candle to be considered a bearish order block, the first thing is that it must have taken liquidity above an old high. You see, this is an old high here. We must have seen price trade above this old high by this candle, okay. That's the first category. And then the second category for it to be qualified as a bearish order block is it must have a candle that has traded below it, okay. Like it must be traded through, okay. One, it has to take liquidity above an old high. Two, price should trade below it, meaning it should lead to a shift in market structure. It should be traded through, right? And then the third category is that when the third candle forms, there should be a fair value gap in between them. We have already studied fair value gaps, okay. This is a high probability order block. One, it must take liquidity above an old high. Two, it must lead to a shift in market structure, means it has to be traded through aggressively. And then the third category is that it has to contain a fair value gap. That is what makes an order block a high probability order block. Now, what is the significance of an order block? As a smart money concept trader, when we see an order block, these are areas of these are areas where the smart money have pending orders, okay, and these are very sensitive areas to trade as a smart money concept trader. Now it can form on different time frame, okay, different time frame. Again, like I said before in the previous video, price action is fractal, meaning whatever happens on the higher time frame is also happening on a lower time frame. Whatever is happening on the lower time frame is also happening on a higher time frame. So you can find all the PD arrays on the lower time frame the same as you can find them on a higher time frame. So price action is fractal. So when you see an order block, what comes into your mind, especially an order block that has a fair value gap? Now, as a smart money concept trader, anytime price returns to that order block, you want to see it sell off, okay. It's going to act as a classic resistance, okay, and you can place your order there and anticipate that price is going to sell off. Now usually an order block is also divided into 4 parts. An order block is divided into 4 parts. You have the upper quadrant, the midpoint, the lower quadrant, the high and the low of the order block, okay. Now anytime you see an order block, what you want to do is you want to measure this order block, just like I taught you how to measure fair value gaps. Order blocks are also measured because there is a particular, or there are particular levels where IPTA will want to give reference to or respect to. So when you measure an order block like this, you have to pay attention first to the midpoint of that order block, and the midpoint of an order block is called the mean threshold. The mean threshold, okay, mean threshold. Remember we said the midpoint of a fair value gap is what? Is a consequent encroachment, CE, but the midpoint of an order block is called the mean threshold. So you have to pay attention to that because IPTA will always refer to the mean threshold of an order block and use it as either a support or a resistance to take price. You can put it this way, okay, MT, that's short form mean threshold. Mean threshold is the midpoint of an order block. I hope you understand that. So sometimes the market will just come and it will hit the low of an order block and then sell off. The sensitive areas are the open of this order block, the lower quadrant and the upper quadrant in case you are bullish, okay. And then in case you are bearish, sorry, and if you are bullish, the sensitive parts are the open or the high of this candle, the upper quadrant, and then the midpoint, which is the mean threshold. Those are areas where you can see the market react and buy off. And if you are selling, those are areas where you can see the market react and then sell off. We are going to do that more when we start learning how to use the Fibonacci tool. Now sometimes IPTA will even just come and it will not even trade up to the order block. It will just fill the fair value gap that is closer to that order block. That is high probability. It can just fill this fair value gap and then it will sell off, okay. So anytime you see an order block with a fair value gap, that is usually a very, very high probability order block. And if that order block also has led to what? A shift in market structure. We are going to study shift in market structure, don't worry. Shift in market structure simply means price has shifted structure. From here upwards is an uptrend, okay. Now if price trade below this candle here, it means it has shifted structure. It is no longer in an uptrend. So the structure of this market is shifting from being an uptrend to possibly a downtrend. So when it leaves this gap here called this fair value gap, if we ever return to that fair value gap or hit this order block, then that should be a high probability sell. So this order block is referred to as a bearish order block, okay, a bearish, because it's going to lead to a bearish market structure. Now just to mention again, order blocks can be abbreviated as OB, okay. For the bearish order block, you can abbreviate it as negative OB because it is bearish, and for the fair value gap, bearish fair value gap, you can abbreviate it as negative FVG, okay, negative FVG. That is a bearish fair value gap. Just to mention again that fair value gaps or order blocks also can also be formed in between price action, okay, in the midpoint of price action. While price is dropping, you are still going to have order blocks form along the way. So it must not necessarily be the last candle right over here. You can still have order blocks also form along the way, and they are still very, very sensitive. Anytime price returns to that order block, especially order blocks that you spot on a higher time frame, always expect to see some form of reaction, because that is where the smart money is looking to take their positions. This is also an order block, a bearish order block. You can also consider it, and for the most part you see price will sell off from there when you are bearish. I hope you understand the bearish order block. If you flip the coin for the bullish order block, it is the same thing. Now for the bullish order block also, it is also a change in the state of delivery. But now we are just flipping the coin because it is formed when the market is actually selling off. When the market is actually selling off, and then we see the last sell candle that is formed down here when we are in a downtrend. The last sell candle, remember from here downward is a downtrend, okay? And then we see the last sell candle that is formed here, the last sell candle. Let me just turn this one even to red so that it can really indicate that we are in a sell market. Okay, good. Just give me 1 minute. Let me turn this to red. Good, perfect. Let's say we are in a sell market. In a sell market, meaning we are in a downtrend, right? And then we see the last sell candle that formed here prior to a move higher. That is your bearish or your bullish order block in this scenario, because it's going to lead to a bullish market. Price is going to move higher. I hope you get the point. Now, what is the criteria? First, it has to take liquidity below an old low. This candle here formed a low, so this low is an old low because it formed prior to before this one or prior to this one, so it is old. Now we want to see this candle trade below it and take liquidity below this old low. Now what is the next criteria? The next candle that is formed should trade above this bullish candle here, okay, this bullish order block, which is the bearish candle. We want to see price trade above it, which means it has to lead to what? A shift in market structure. It must be traded through to make it valid, okay? And then what is the third category? It must contain a fair value gap to make it high probability. Now there should be a fair value gap here above this candle. This candle should trade above this candle, and then the next candle that opens should not trade below here, okay? It should form a fair value gap to make it very high probability order block. Sometimes the market will trade below it, that's okay, but if you see an order block with a fair value gap, that is a very high probability order block. Trust me, you can make a lot of money in the foreign exchange market trading only order blocks. Order blocks and fair value gaps are very powerful. We are going to see how these institutional reference points are used and respected in the foreign exchange market. And just to mention again, how do you spot a fair value gap? We did that in the next in the previous video. If you have not watched it, I recommend that you go back again and you watch it. The low of this candle above here and the high of this candle, the high of this bullish candle, they should not meet, okay? They should not intersect, okay? And if they do not intersect, the gap that is formed in between them is what we refer to as what? A fair value gap. And a fair value gap, like we said, is an area of inefficient price delivery, and those are areas that are formed when IPTA is in a rush to deliver price, leaving gaps behind. So IPTA will always refer back to those areas of inefficient price delivery to offer what? Fair valuation or fair value price. So when you spot a bullish order block with a fair value gap, anytime price returns to those areas, they will become very sensitive and you can take your trade from there, okay? You can take your trade from here and you anticipate that price is going to continue to move higher. I hope you get the point. So to note bullish fair order block, it is denoted as what? Positive OB, okay? Positive OB is for bullish order block, meaning it is going to lead to a bullish market. And then positive FVG is a bullish fair value gap, meaning that it is going to lead to a bullish market. Negative OB is bearish fair value order block. Negative FVG is bearish fair value gap. I hope you get the point. Just to mention again that order blocks can still form alongside the way as price is moving on, and you can still respect that a lot, okay? When price returns to those order blocks, they can still be respected and used heavily. I hope you understand what an order block is, and you can go ahead and practice this, okay? Now just to mention again that the midpoint of an order block is called the mean threshold. So always measure an order block. In future I am going to do a detailed video how to measure an order block, because when you look at this order block here, even this week here, in future you will see IPTA even treat this same week here below here as a gap. Okay, this tail here, IPTA is going to consider it as a gap. We are going to look at how to do that in the next videos, don't worry. But for now, just pay attention to what the low of this candle, the close of this candle, the open of this candle, and the midpoint of that candle, which is the mean threshold, because IPTA will always like to trade to that mean threshold and then take price to the opposite direction. The mean threshold, the upper quadrant or the lower quadrant are also very sensitive areas. I'm going to teach you how to use the Fibonacci tool, don't worry, and you will know how I am being able to measure all of this. You see, this is the upper quadrant, which is 25% of this order block, and then the lower quadrant is 75%, and the midpoint is 50%. Those are very sensitive areas you will see IPTA react to when it hits an order block. Okay, I hope you understand this. Let's go to the chart and I'm going to show you how you can use order blocks or how order blocks and fair value gaps have been respected. Okay, all right, thank you so much. Let's go to the live market now. You can spot this on different time frames, very different time frames. Now let's scan the market and look at bullish order blocks. We can even go to the daily time frame and we'll see how IPTA respected order blocks. Good, look at this one here. Does it resemble what we have just taught? Yes, it does. What is this last buy candle over here? This is a bearish order block. Look at something here, what I just taught you. Now it is high probability. What does it have? It contains a fair value gap. Look at something here, it contains a fair value gap. And what has happened? Look at, price has also traded below that bearish order block, which makes it very high probability. See, look at how we traded below this candle here, this last candle. We traded below it, which means it led to a shift in market structure. And then what does it contain? It contains a fair value gap. Look at how price traded back into it here, hitting what? This fair value gap, the midpoint of this fair value gap, and the lower quadrant of this order block. If you measure this order block, you realize that price hit its lower quadrant, and then what happened? It sold off. You see, this is a high probability order block, which is a bearish order block. Okay, a bearish order block, a 4-hour or a daily order block, daily bearish order block, because it is formed on a daily time frame. You see, that's a fair value gap and a bearish order block coinciding with one another. Now, just like I said, order blocks also can still be formed along the way. It must not be right over here. See, this one's also, this series of candles where we have like a consistent series of candles, like all green candles. Okay, this also is a bearish order block, because these are the last candle that were formed while price was buying here. Now look at how price came back to hit its low. See, price traded back into the midpoint of this order block here, which is the mean threshold, and then sold off. You see how many times the price retests the low of this order block here. Those are key sensitive areas also, and then price sold off. I hope you get the point. So just to prove to you, look at something here, settings style. I'm going to put the midpoint, and then you see how price hit the midpoint of that bearish order block and then sold off. This is just to prove to you that what I'm teaching you is correct. See, that's the mean threshold of this order block here. These two candles here, they can also be considered an order block. These two candles, it hits the midpoint and then you see it's sold off. Okay, that's called the mean threshold. That is the midpoint of an order block. Even here, you see these candles right here, all of these candles here, this is an order block, a bearish order block. You see price stays below it, price never came right above it. Okay, all of these candles, these last buy candles here. Okay, even this one here, this last candle here is a bullish order block. This last candle is a bullish order block. This candle here is also a bullish order block. Okay, a bearish order block, pardon me. It's a bearish order block. I hope you get the point. Now let us see if you can spot a bearish order block. Does it resemble what I've taught you? Just look at this one. We are in a sell market, right? This is a sell market, and then eventually we see this candle here. What does it do? It takes liquidity below these lows, right? What does it do again? you see there's a shift in market structure, which means the candle has been traded through. Right now, there's a fair value gap here. It is called an implied fair value gap. I've not taught you about that. I'll teach you, don't worry. This is a fair value gap here. So it contains a fair value gap. You cannot see it, but this is an implied fair value gap. In this case, we measure this week, and then we measure this week, and then we take the midpoint. It becomes an implied fair value gap. Don't worry, we'll do that in future. So if you measure this order block and you extend across, see how price never traded below this order block. You see, look at the midpoint. Let's take all of those candles. Look at this midpoint, which is the mean threshold. You see price stays above that, right? So these are very, very powerful, to be honest, if you can combine order blocks and fair value gaps. Now this is another order block here. All of these candles you see here, they are order blocks also. Okay, now you see it gets traded through, right? It contains what? A fair value gap. This fair value gap. Now price hits just the high of this order block and buys off. These red candles here, this one is an order block. Okay, they are all order blocks, bullish order blocks. Let's see if we can spot another one. Good. Look at this candle here, this last sell candle here, this one here. This is what? A bullish order block. Why? It traded below this low and took liquidity. It was traded across, okay, meaning it led to a shift in market structure. And then what does it do? It contains a fair value gap here, even though price did not come to that fair value gap. But look at the sensitive area. It took the high of this order block, which is also a very sensitive area, and then it bought off and price never came there. You see, so this is a bullish order block here. So you can go to the market and you look at the last sell candle that was formed. That is your bullish order block. Look at this one here. If you can only trade bullish order blocks and fair value gaps, you will make a lot of money, trust me. Look at this one here, the last sell candle that was formed. Price traded above it, leading to what? A shift in market structure. Right now it contains what? A fair value gap above it. This is very, very high probability order block. So you are going to mark it across and you are going to name it. Okay, now look at what happens here. If that took price back, filled this fair value gap here, and then hit the high of this order block, see what happens here. Is it not magical? You see, so you can trade just order blocks and fair value gaps and you will make a lot of money, trust me. Now this is live price. Okay, let's look at this live price, GBP USD. Let's look at what GBP USD is currently doing at the time of recording this video. This is the 5th of October 2024. Now this is last sell candle here, right? It led to a shift in market structure because you have traded above it. Right now, if you measure these small candles here, there's a fair value gap here. Now let's extend this across. Look at how the market has reacted to it just like that. Okay, now we are expecting to see what? A reversal from here, because you have filled this fair value gap here. There's a fair value gap here. If I zoom this one, you are going to see a fair value gap. Look at how we have traded into it. We have hit. I told you also you can measure this week. Okay, the week of this order block, it's going to be valid. IPTA is going to consider it as what? As a gap. It trades into it, and then you see a reaction from here, like we start pushing up already. So price is not random. Okay, before you see anything happen in the market, there must be, it is either IPTA is filling a liquidity void, IPTA is filling a fair value gap, or IPTA is trading into an order block, or whatever PDRA it must be trading into. Okay, or IPTA is running liquidity. That's exactly what the interbank price delivery algorithm is doing. So price is not random. Remember I told you there's a fair value gap here, right? That's the fair value gap I just highlighted. So it is filled now, and then it has hit an order block. So what do you expect? We are going to see price reject from there and then push higher. You see, that's a fair value gap, or an order block with a fair value gap. That's a high probability order block. I hope you are able to learn something here. So you can go to your chart and you try to see how you can identify order blocks. And when you identify an order block, make sure you name it. Okay, I'm not doing it because of time. Like this one, for example, this is one daily, right? So this should be daily. You represent it as D, daily bullish order block. Bullish order block is represented as what? OB. You see, so that is a daily bullish order block, so that whenever price returns there, you should know that what it is reacting to a daily bullish order block, and this one should be what a daily fair value gap. That's how you should name your chart. Okay, I'm not doing it because of time, so this should be D bullish FVG. Okay, you should name it this way, so that when price ever returns there, you should already know that okay, this is my draw on liquidity. Draw on liquidity in smart money concept simply means something that price is gravitating to. What is IPTA gravitating to? Is IPTA gravitating to a fair value gap? Is IPTA gravitating to an order block? Is IPTA gravitating to take out stops? Or what is IPTA seriously running into? That is what we refer to as a draw on liquidity. It's like a magnet that is attracting price to itself. Okay, that is a draw on liquidity. So institutional reference points are draws on liquidity because they are areas that price is being drawn to. Okay, so you look at what happened here. Order block with a fair value gap. This one also here is an order block. Like I said, an order block can also be formed along the way. This one is also an order block. Okay, I hope you have understood this. Now please go to the chart and see how you can identify order blocks. Okay, and then you send your screenshot in the group. This last candle here is an order block. You see how price traded below that. That's the last buy candle that formed there. See, you see the move here, how price sold off from there. Okay, we also have reclaimed order blocks. Maybe I will do that in the next video because this video is already long. We also have reclaimed order blocks. Okay, reclaimed order blocks, that's another type of an order block. This is an order block here, a bearish order block. See, look at how price hit it and then sold off. So price action is not random. It's not buying and selling pressure. See something and then it sold off from here, right? This last one over here also, this is a bearish order block. This last sale candle here, this last one, see how price hit it and then sold off. You see the market traded into it and then sold off. Now what is the condition? It has also to be traded across like this, like so. You see we trade below it like so, right? And then we trade into its midpoint, which is what the mean threshold, right? And then what happens? See this gap here is a volume imbalance, which is also like a fair value gap. But if you look here very well, you are going to see a fair value gap also, right? An order block with a fair value gap, which is high probability order block, and it also took liquidity below this above this candle here, which is an old high, right? So those things I teach you, they are very, very efficient traders. If you can pay attention to them and you practice them, you are going to make a lot of money. This last candle here is an order block. This last candle here, right? See the way price respected it. That's a bullish order block, and then it bought off. It led to a shift in market structure. Here we can have implied fair value gaps, right? It traded into it and then it took off. We also have propulsion order blocks. I'm going to do it in the next video. A propulsion order block is simply an order block in an order block. Okay, an order block in an order block is a propulsion order block. We are going to see that. I will do a video on that. Look at this candle here. This is a bullish order block, right? Why is it a bullish order block? You see price traded above it. Okay, and then what does it contain? It contains a fair value gap. Now when price returns there, fills this fair value gap and hits this order block, it becomes a high probability order block, and you see price buy from there. Thank you so very much, and go ahead and practice this, and we'll meet in our next class. Thank you.